In this video, I'm going to be helping you out simplify SMC strategy and how you can go about it. This simple concept is going to help you become a much more profitable trader, or it's going to help you step up your game. Without wasting much of your time, let's get started. And if you haven't subscribed to this channel, make sure to do so and like this video, share to your friends and your folks. Let's go straight to the para. Now, the first thing you need to know if you're trying to do the SMC strategy is understanding how these things work. Okay, most of you don't understand what a breakout structure is, a change of character is, and all these things. So I'm going to be briefing all these things down. So the first thing we're going to go into is what a breakout structure is and how to use it in your own benefit or to your own benefit. And the next thing we're going to go to is what a change of character is, what also a fair value gap is, fair value gaps or imbalances are. Then we're going to be going into other blocks in general. Okay, so let's not waste much time. Now we start with what a breakout structure is. Now if we see prices move to the upside this way and comes down this way, now coming down this way means the prices has made a retracement. Okay, once the prices break this level, that's this last high, then we have a breakout structure to the upside, and we can indicate this as a bullish breakout structure. But don't worry, I'm going to be showing you all this in the chart as well, and I'm going to be telling you what makes a valid breakout structure and an invalid breakout structure. Okay, now if we see this way, this is the traditional breakout structure you want to be seeing. Okay, now if it comes down again, then we have a retracement. If it doesn't break this low, this recent low, because this is the most recent low, if it doesn't break this area here and we go up here and break this level, then we have another breakout structure. Okay, but as soon as prices comes down and take out this most recent low that we have here, then we can call here a change of character. Now let's go straight to the chart and let's identify these things step by step. Now as you can see here, we can see that we have this area, we can see that we have this nice low, and we have this breakout structure coming down to this level. We have this breakout structure here. Okay, we have this level breaking here a little, then coming down, breaking this low, we have the change of character, then we have this nice reversal, then we came here. Now let's zoom straight into this and look at it very well. Now look at this area. I told you this area is a nice breakout structure. So we have this nice breakout structure at this area, so I'm going to be naming it a breakout structure. So this is the most recent low at that area. So if we take out this most recent low, we have a change of character. So as soon as we take out that recent low, we have a change of character. Now and we reverse to this side. As soon as we don't break this recent high, then we are still bearish. Then we have another change of character at this zone as well. So this is our most recent high right now. So as long as we don't break that area, we are still bearish. But right now we broke that area, means we now have a change of character to the bullish side of the market. Okay, so right now we'll be looking at buys at this zone. Okay, so coming down to this zone, let's take that out. So coming down to this zone, we have a nice pullback, then we have another breakout structure. I'm sorry, we have another breakout structure in this area. So it goes all and all and all and all to this level. We have another breakout structure at this zone. So I'm going to be mapping out all the breakout structures right now, and then I'm going to be explaining how we got these levels. Okay, then we had this sweet reversal, then we have another breakout structure here. So we have this breakout structure here, then it goes all and all to this area. Fake out. Okay, we have 1, 2, we have those fake out. So we have this area as our most recent high, Okay, so this area is going to be our most recent high since we haven't broken this area, and this area our most recent low. So this is what we have right now on this chart. Now let's take these things from the onset where we started from. Now, to get a valid breakout structure, you need to look for a valid retracement. And if you've been following me very well, I always explain what a valid retracement is. The valid retracement starts when you map out the last candle that caused that bearish move. Okay, so you're going to be looking at a pattern and you're going to be observing the last candle that caused that bearish move. Okay, so if we have this last candle this way that caused that bearish move, so we have it this way, so we're going to be saying, okay, this white candle is the last candle that caused the bearish move. Okay, so then we're going to be looking for 3 candles coming below that last candle, okay, without bridging each other. What is bridging each other? Bridging each other is that, or bridging the last one means that when they were coming down, they didn't go above anyone. Okay, now I always like explaining it this way, which is pretty much simple to explain. Okay, let's say this is the last candle, so I'm gonna change this color to something much more visible. Then we also look at the low of that candle as well. So we want to see the next candle come below this level, which is this. So we've seen this, so we identify it as a first good reversal. So this is a very nice reversal at this area. So now what are we going to be looking next? We're going to be looking at the low of that candle and the high of that candle. So the low of that candle and the high of that candle looks this way. So we want to see another candle come below it. Okay, we want to make sure these candles are 3 coming below the last one. That is the main candle that caused that breakout structure. So we want to make sure that the candles coming down are 3 in number. So once they are 3 in numbers and they follow themselves the way I told you without bridging the last one, then it is valid. Okay, so we're looking at this high and this low. So the next one came down and this is the low of the next one here. Okay, and the high, I'm sorry, and the high of that candle is here. Okay, now you can see that the third one didn't go above this area, so it means the whole area right here is valid. So anything that goes above this area is a valid breakout structure. Now if it doesn't occur in this way, means anything that goes above that area is not a valid breakout structure. Okay, means it's not a valid breakout structure. Now look at this thing, it came down and it broke this area, means we have a valid change of character. Okay, so if we're looking for a reversal, we're going to use the same pattern. A valid reversal goes this way, be it bullish or bearish or whatever. A valid retracement, even in the bearish scenario, goes in the same pattern. Okay, now we'll map out the last candle, which is this nice bearish candle here. So we've mapped that out as well. So we're looking for candles above it. Okay, remember when we are looking for a bullish retracement, we are looking for candles below the last candle. But when we are looking for bullish retracement, we are looking for candles below the last bullish candle that went up. So we're looking for candles below it. Okay, when we're looking for bullish retracement. But when it comes to a bearish retracement, we're looking for the ones above it. Okay, it's just an inverse move. Okay, so bullish below, bearish above. So it's just an inverse move. It's very simple. Okay, so we're looking for the candles above it. Okay, now let's go. Let's map out this low. Okay, this is the low area and this is the high area. It's very simple. So I'm looking for the first one above it, and the first one went above it. So let me just take out this so that you can see it clearly. So the first one went above it. Okay, so the first one went above it, and we have this side and this side. Okay, so I'm looking for the next one to go above it. Okay, but right now we can see the next one broke that candle. Okay, now since we have just one bridging that area, we can still consider that area as a valid area, since we are not going to have another one coming down to bridge this area, because once we have another one coming down to bridge this recent one after this one, means everything is invalid. Remember I said this is the first break right here. This is the first break after this last bearish candle that is causing this reversal here. after this last bearish candle that's causing this reversal here. Now we are looking for candles to go above it. Since we are looking at a bearish reversal, we are looking for candles to start buying above it. When it comes to bullish, we are looking for candles to start selling below it. Yeah, we are looking for candles to start buying above it. Okay, so it's just an inverse move. It's very simple. Now on this note, we have just one bridging this area. If we have another one coming to bridge this area, yeah, everything remains what? Invalid. But since we just have one, we could still move. Okay, just make sure that the next one goes above this green area, and doesn't breach this last low area. Okay, that's all you're going to be looking at in this scenario. But once it breaches that area, means everything there is invalid. We need to look for another place, and this is why you need to understand it, so that you won't have situations where you see a bearish pattern this way and you see something that looks like a breakout structure like this. Then you have the prices go up to this area. Since that thing is invalid, it could go up to this area and feast that zone and start coming down, and you start saying, oh, you have a change of character. Now two things are going to happen. You are going to lose the trades coming down here because it's planning to go up, and you're going to lose the buys as well. Means you're going to lose the sells at this region because the prices is trying to go up, and you're going to lose the buys at this region as well, especially for those guys that try to use aggressive pattern entry. But for those that will use confirmation pattern entry, this might not show you anything. But for you not to start even looking at this area at all, you need to just understand this pattern I'm teaching you right now. So you don't look at this area at all, and you just know that this area right from the day one, it is a failure on arrival. Okay, so you eradicate your mind from that area and start looking at the major area, because this is just a sweep. Okay, this is going to sweep your liquidity, take out your stops, and tap into these zones and start coming down. So that's why we're trying to understand this pattern very well. Now let's go back to that pattern. Now we're looking for two more above it, okay, to complete it, that three I told you earlier. Okay, so we have the next one above this area, one. So we're looking at another one above this two area without bridging. Then we have the third one. We also have the fourth one, that way, and it goes on and on. Means this area is now a valid retracement for that stuff. Okay, you can see we have this nice valid retracement. And if you're about to take a trade, and let's say you are one of those guys that like to use the fair value gap, if you want to use your fair value gap, you could just say this area is a nice fair value. Okay, it's a nice fair value for you. Okay, you could just do this area. Okay, this is one of the cleanest fair value you could just use for your trade. You can see that this area is not a fair value. Everything, all prices sat neatly at this point. You can see this other point, everything sat neatly. There are no space for fair value aside from this zone, which this and this are not meeting up nicely. Okay, so we have this fair value area. You can actually use that as well, or you can use the way I like using my thing with my Fibonacci, which gives me the right range at this zone. Then I execute my trade nicely. Okay, so if you wanted to take a trade here, this would have actually played out nicely using both my Fibonacci style and your fair value gaps. Okay, so without wasting much of your time, but I would really advise you use the Fibonacci style, because sometimes these fair value gaps might not really work the way you want them to work, and might really waste some of your time, and you won't really like such. So I would advise you use the Fibonacci style to get these things across to yourself, or to get better results for yourself. Okay, now having done that, we have that zone neatly as a reversal. Okay, so that zone reversed where I will have the nice area at that zone. Okay, looking at this area, prices came down to this place. Let's see if we have another valid structure here. So prices came down to this place. Okay, and this is the last one here. Now from this place, we started looking at our reversal zone where we had 1, not bridging down, 2 not bridging down. I told you this could happen, so this is just one. We're looking at this area, we didn't get another one, then we got another, the third one above this. So this area is also valid, and you can use your nice fair value gap at that zone as well if you intend doing that, which is here to here. This is a nice unmitigated area or fair value area, and we had some nice sales here. Honestly, we had some nice sales if you are planning to use my kind of strategy, which is a 1-to-1. But let's look at this by ourselves. So let's just say yes, mitigated, and let's go into the 3-minute time frame. Let's see if we get nice sales here according to my strategy. Now, according to my strategy, we'll be looking for a flip pattern. Now we had 1, 2, 3 fake out, so we start from this area. We had 2 fake out, then we start from this area. To me, 1, 2, 3. Okay, that is okay. We start the reversal, 1, 2, 3. So we had nice reversal. We can look for a fair value gap there if we like. We can say, okay, this area to this area, we can say this area to this area is a nice gap for fair value, but like I told you, I do not like using it. You can say this area is also a very neat fair value gap at this zone. I do not like using all these things. Okay, what I prefer using is my Fibonacci range, where I just rule from here to here, and it gives me the perfect range where I would like to place my trade. So I can just say sell 1-to-1 ratio. Okay, putting my stop loss slightly above this zone. Okay, I could just put like 4 pips more. Let me just say 10.4. Okay, 10.4. I could just say 1-to-1, and here we have it. Voila, it's looking nice. It even came down to 1.5. This looking nice, and this fine for me. Okay, so that is another valid zone as well, as we can see. So let's just go back to what we've been looking for. Okay, so let's take this out. Now, here comes the game. You're going to see something like this. Now, at this area, most people will say this is a breakout structure. This is something I'm trying to explain to you guys. Most guys will say, wow, this is a breakout structure. And, you know, what I told you would happen at that zone might just happen, you know, when they say this is a breakout structure, because they have this little pullback and they might be waiting for buyers here. I told you, you get liquidated and the prices will go up because that area is what invalid, and that was what I was trying to explain to you guys at that region. Now let's look at the way or what made this area invalid. Now the last candle was this area. This was the last candle here, so we're looking for 3 down. Okay, we're looking for 3 down, like I said. Now the first one came down 1, 2. The last one went above this. It breached that area, and the next one came above it, and it started going all. Okay, means everything here is what? Invalid. So we'll still be looking at this area as our potential low, and we could use a fair value gap, but I told you I do not like using fair value gap. I just prefer my Fibonacci range that gives me the perfect area where I would like to do something. And now we got this nice zone here for our buys. Okay, so this is basically how to go about the smart money concept. You need to understand what a pullback is, a valid pullback or retracement, and what a break of structure is. Okay, so this is how to do it, and this is the most simple way you can ever have, or the most, you know, easiest way to understand these things. Okay, so you could watch this video over and over again and for you to understand. So if you have any questions or you have any topic you want us to treat, please drop that comment in the comment. Drop your suggestion in the comment section. We'll get back to you and we'll try as much as possible to treat that topic. See you guys next week, and make sure you subscribe to this channel, turn on your notifications, and share this video to some of your friends and families that are interested in trading, and make sure to join our Telegram channel as well. Peace out.